When you think of Wall Street, you probably think of names like Goldman Sachs or JP Morgan, right? But what if I told you one of the most powerful players is a firm you've likely never even heard of? Today, we're pulling back the curtain on a company that loves the shadows, Jane Street. We're going to dig into just how this secret money machine actually works.
Okay, let's just start with a number. A really, really big number. $10 billion. That's what Jane Street pulled in as net trading revenue in 2023. We're not talking gross, we're talking about the profit, after costs. That's a staggering figure that makes even the biggest players on Wall Street sit up and take notice.
And believe it or not, it gets even crazier. By 2024, their total assets ballooned to over $140 billion. Now, to give you some perspective on that, that's actually bigger than Bridgewater Associates, which is famously the largest hedge fund on the planet. So yeah, we're not just talking about a successful firm here. This is a true financial Goliath, operating on a scale that's just hard to wrap your head around.
So what does that kind of size mean in the real world? Well, their influence is just immense. Get this, Jane Street is involved in about 1 out of every 10 equity trades in North America. Think about that for a second. Every time the markets open, their algorithms are a huge part of the action, shaping prices in a very real way.
So it all begs the question, right? You see these mind-blowing numbers, you see their incredible reach, but the company itself is notoriously private. So who are these people? And more importantly, how in the world are they making so much money? What's the secret?
Well, to figure that out, we've got to do a little detective work. And we're going to use a very rare clue to look under the hood. It's a financial statement they had to file with the SEC way back in 2015. For a company this secretive, this document is basically the Rosetta Stone. It's our blueprint for their entire money-making machine. And here it is. I know. It looks like a bunch of dry, boring financial paperwork. But trust me, for a company like Jane Street, this thing is like gold. It basically spells out the core mechanics of how they operate, the gears and levers of the machine. And what's really interesting is that the fundamentals we see here are pretty much what they're still doing today, just on a much, much bigger scale.
Okay, so if we're going to understand their strategy, we have to start with this key term. Market maker. That's what they call themselves in the filing. So what does that even mean? Well, think of them like a giant Costco for stocks. Their job is to always be willing to buy and always be willing to sell pretty much any security at any time. This creates liquidity in the market. They make their money on the tiny, tiny difference between the buy price and the sell price. It's called the spread. We're talking fractions of a penny. But when you do it millions and millions of times a day, well, it adds up.
All right, so that's the basic idea. But what does that market-making machine actually look like on the inside? What kind of stuff are they holding? Let's dive into this old blueprint and see what a multi-billion-dollar portfolio actually consists of. So, what are they trading, really? You might be thinking it's all super complex, exotic stuff, right? Like currencies or weird derivatives. The answer, which we get right from their own filing, is actually kind of surprising, and it tells you a lot. So check this out. This is a table straight from that 2015 document. It lists out everything they owned at the time, valued at market price. You can see they've got some options, some corporate bonds, but look at the numbers. There is one category here that absolutely towers over everything else.
Let's break it down so it's a little easier to see. Wow, just look at that. Of their $7.5 billion in assets, over $7 billion of it was in equities. We're talking plain old stocks. So at its core, this super sophisticated high-tech firm was basically running a massive, massive portfolio of stocks. But that's really only half the picture.
See, for pretty much everything they owned, they were also making a huge bet in the opposite direction. If you look on the right side of this table, you'll see this column for liabilities, and this line item sold, not yet purchased. Look at the equities line, nearly $6 billion worth of stocks that they'd sold but hadn't actually bought yet. So what does that even mean?
Well, securities sold, not yet purchased, is just the fancy accounting way of saying short selling. It means they're betting that a stock's price will go down. They borrow the stock, sell it, and plan to buy it back cheaper later to return to the lender, and they get to keep the difference. So you see what's happening? Jane Street isn't just betting on stocks to go up. They're making these enormous balanced bets on both sides of the market at the same time, going long on some stocks and short on others.
Now, this strategy is obviously incredibly profitable. But playing with billions of dollars on both sides of the market like this, that comes with a jaw-dropping amount of risk. And the very same document that gives us this blueprint also gives us a pretty stark warning about just how dangerous this game can be.
I mean, they spell it out themselves, right there in the filing. You've got your standard stuff, like market risk, the chance that prices just go against you, or liquidity risk, which is not being able to sell an asset when you desperately need to. But the one they highlight, the one that's really eye-opening, is the risk that comes with all that short selling.
And this is a direct quote from them, not me. They say that losses can increase rapidly and in the case of equities, without effective limit. Think about that. If you buy a stock, the most you can lose is what you paid for it, right? It goes to zero. But when you short a stock, there's theoretically no ceiling on how high the price can go. Your potential loss is infinite. And they're admitting right here that it can happen fast and with, as they put it, no effective limit. That's intense.
Okay, let's connect the dots here. We've just picked apart this blueprint from 2015. So why does this old document even matter now? Well, it matters because this machine, this strategy, is the very engine that built the financial powerhouse we're talking about today.
I mean, just look at the incredible growth this engine powered. Back when that blueprint was made, in 2015, they were holding about $7.5 billion in securities. Fast forward to today, and they control over $140 billion in total assets. The growth is just exponential. And the crazy part is, the fundamental mechanics, what we just looked at, are still at the very heart of how they operate.
So, what's the big takeaway here? It's that this core business model, this market-making, two-sided, super high-volume, stock-focused machine that we saw in that 2015 filing, it didn't just work. It worked spectacularly. It was a secret recipe that let them grow into one of the quietest, but also one of the most powerful and indispensable firms on all of Wall Street.
Which, leaves us with one last, kind of scary question to think about. We've seen how powerful their machine is. We've also seen them admit how risky it can be. So, as this one very private company becomes so big that it's crucial to the entire market, what happens to the rest of us when that machine eventually runs into a risk that it just can't predict?